Welcome to Trading Nation. I'm Michelle Caruso-Cabrera, and one of our guests today is highlighting what could be an emerging risk for investors to watch. Let's bring in the Trading Nation team for more. Matt Maley is with Miller Tabak. Boris Schlossberg is with BK Asset Management. Matt, you've got a note out today where you're looking at credit spreads. Tell us what you're seeing and how's it going to impact the market?
Well, I mean, this is more something I'm just kind of keeping an eye on rather than something that is a big warning flag or anything yet. But there's no doubt the credit spreads are starting to widen out a little bit in the last couple of weeks, especially in the last few days. And again, we're not looking for a repeat of 2008, where the widening of spreads is nowhere near anywhere near 2008, and not even as wide as they were in 2016 when we had the high yield issue, when the oil market, of course, fell out of bed. But it's still starting to move higher, and that's always, it's usually a good leading indicator for a problem for risk assets. I mean, when spreads widen out, banks are a little less willing to loan money. But most importantly, we also have a huge amount of leverage in the system. Even after this whole short vol situation is kind of pushed to the side and been wiped out, we still have a lot of leverage in the system. And as rates move higher, and especially if spreads widen out, people have to unwind some of that leverage. And so that's a real negative thing for risk assets. So again, I don't want to start saying crying fire in a crowded auditorium, but it's still something we have to keep an eye on. So if they start to widen out further, it's going to present a problem for many risk assets, not just the stock market.
Boris, when you look at that chart, it was a pretty sharp rise. Yeah. Are you worried about the increase in spreads?
I agree with Matt. It's flashing yellow. It's not flashing red yet, but it's definitely flashing yellow. And on a positive side, you could say it's simply correcting some of the excesses that we had in 2017 in terms of the blow-off moves in credit. But on the other hand, it's also suggesting that the market is starting to really get concerned about risk, and it's a de-risking move. As I said earlier, the yields on a 2-year to 10-year are compressing. That's the same kind of a theme. The market basically is anticipating a slowdown in economic growth rather than expansion in economic growth. All of those factors should be a big warning sign to investors.
Got it, guys. Thank you. Something definitely to watch for. All right. Thanks to Matt and Boris for joining us today. And thank you so much for watching Trading Nation. I'm Michelle Caruso-Cabrera, and we'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.